All right, folks, welcome back. We are looking at the NASDAQ. Now, I was going to do two videos. I was going to make one earlier this morning about yesterday and then wait till this afternoon and do today's video, but I'm going to kind of like blend them together. So it'll save you some video watch time. I'll try to be as brief as I can possibly be. You know how I am. All right, so first and foremost, let's take a look at yesterday. Here is Tuesday's daily candle. And inside this little area right there, that is a volume imbalance because the wicks bridge the two bodies together, but there's no body laying in there, and there still has yet to be a body laying inside that little area. So the market opened, traded down into that here, and also this wick, this candle right here, it's wick. I'm measuring that to get the consequent encroachment. That's what that red line is here. Okay, and in case I forget about it, I might talk and forget this. This wick right here is a draw, and the consequent encroachment is this level here. Okay, so for like non-farm payroll, Thursday and Friday, I think that might be a upside draw, and then if it gets really animated, the high here, and then that small little volume imbalance right there. Okay, so that's kind of like what I'm expecting. I'm not demanding it, obviously, but that's what I think is probably unfolding. But I could be wrong. It's not farm payroll, so don't be taking trades based on what this said. Also, looking back to this wick here, okay, that consequent encroachment there, that's that there. But now it was a premium draw on liquidity when we were down here. Remember that? And then now, because we went above it, this would actually become a discount. Wick. Okay. So I'll actually change that color. These are all things I should have done before. Dude, you could have did all this in 5 minutes. You know, I like dragging you across the coals, the ones that don't want to be here. So yesterday we had, again, the market open, trade down to that volume imbalance and consequent encroachment of this candle's wick. It's half of the wick's length. And then it traded higher and took out the previous day's high and traded inside of this wick. So if we take that wick and we add now the 25 level and the 75 level, these are all pertinent. Those are all still likely targets, if not the high itself going into non-farm payroll Friday. Okay. The reason why I think that's likely to occur because it's come down and filled in even this gap in here. So we have a separation between this candle's low, this candle's high, and we traded down into that today. And it's came off that pretty aggressively. So yesterday started the run up, and I think they came down and stopped everybody out. That would be long ahead of Thursday and Friday non-farm payroll, and then we'll see what we get. I could obviously be wrong, but again, these are the details as to why I believe what I believe. So we're going to jump right down into a 1 minute chart and cut to the chase. And we will look at I wish there was a way, and those of you that know more about TradingView than I do, remember in MT4, I'm saying remember because I don't do anything with MT4 anymore, but remember when the platform would allow you to go back to a very specific date, just by a couple keystrokes, boom, there you're there. Is that possible with TradingView? Because I don't know if it is. If it is, send me a message on X and say, hey, ICT, this is what you're looking for TradingView. And I'll jump to that. All right, so here's Tuesday in the afternoon. And I showed you all those trades and stuff. But the Monday review. I stated that you can go in and do this fair value gap. Okay, remember I had the higher one up here. I took that off so that way our tension's right in here. Notice that fair value gap is also inside that daily volume imbalance, the blue shaded box here. Again, pause the video, rewind it until we are talking about the daily chart, and you'll see what that blue area is here on the daily chart. Well, that fair value gap is inside of that. And I told you to draw that out, and those that did were surprised to see how it came down and hit that. But I want you to take a look at what was also seen. We have relative equal highs. This is why I do the PowerPoint slides, because I ain't got to do all this stuff back and forth. This high and this high. So they're relatively equal. That means there's lots of buy side above this high here. They took the sell side out there, and we dropped down into consequent encroachment of that blue shaded volume imbalance there. Just fell short of that there. And then the low here. It's the short-term low there, that buy side imbalance, sell side inefficiency. Now, when you look at that, look at the bodies here respecting that fair value gap that I told you that would become an inversion fair value gap. Monday's night review for Tuesday's trading. We trade down into that here, consequent encroachment of the fair value gap. And again, if you're not clear as to what I'm talking about here, again, look at the Monday market review, and you'll see this has been suggested to you to draw it out. I didn't do it in my chart, but I told you you can do this too. And those that did it would have it on their chart, Tuesday's trading, and it trades down into it here, hits it, rallies back out, and then the body's supporting it here at the high. We stab down to it one more time, and then we start to run away, and then it comes right back down into the daily volume imbalance high. See that? Then it rallies up back into the new week opening gap and clearing the buy side multiple times, and then taking out sell side here and here, and rallies up, continuing into the rest of the day. In the afternoon trade, I showed you that, and just no point in reviewing all that again. The new week opening gap was used later in the afternoon and evening during the Asian session, and then used as resistance here, sold off. All of these things, the consequent encroachment, look at that. All these things I mentioned during the Saturday space it's what you're seeing here in the chart. It's beautiful to see it deliver as outlined, and it repeats over and over again. And I mentioned the buy side the other day. That's this level here, and in that new week opening gap, it's been working basically those levels back and forth. And then today in Telegram, I told everyone, I posted basically this chart here. I said I was watching this inversion fair value gap where it was used here, and it broke down. Once we traded inside of the new week opening gap, I'll let you watch the videos in the Telegram channel. I'm not going to rehash that because there's a lot of good information in those very short videos. If you're not a member of the Telegram channel, then I guess you won't learn about it. It's not that big a video. It's not earth-shattering, but it is something that I think is pertinent to building consistency and know what you're looking for. And then we trade down into the 25th of April's opening range gap. We pause here, drop down into it, use it as resistance here, and then finally gives another drop lower. And then we have the market reaching down in short-term low. And then here's news.